on both. Hello everybody, welcome back to another episode of Finance Agents Live. Feels like a little while since I've been here. This is episode number 50, half of 100, mid-century deal. Anyway, I'm here, Tim MC, here from Finance Agents. I'm joined today by David Crantz from Lendterra.
Good morning and afternoon, everybody out there.
This has been a fun month for us, 4th of July month, and we've been sending out different deals that we've been doing on the real estate side, which I think a lot of people are really responding to. We've been, doing real estate deals for a couple of years, and we've done some really out there fundings, right? Like we have, David loves talking about the
Goat farm.
The goat farm, yeah.
I love talking about the goat farm.
We got a goat farm.
As of tomorrow.
It might close tomorrow, right?
Well, it will. It'll sign either today or tomorrow. We will fund it by Friday at the latest. It's a 100-acre goat farm in the state of Michigan, in a city called Chelsea, Michigan, outside of Ann Arbor, where the U of M college is. Been doing this for over 31 years now. Seen some pretty creative stuff. Never, ever have I seen anything as creative as us lending on a goat farm.
First, goat farm. If you got a goat farm, come here. We'd love to give you some money. All right. But today, first, we're going to be talking about a foreclosure bailout that we did. So first, we're going to give you a run through on that one individual foreclosure bailout. And then from there, we're going to start talking about who qualifies for a foreclosure bailout. When David's looking at one, what does he look for? What are the things that are going to kill our ability to do that for you? Just so you guys understand where the opportunities are. All right, if it's first time to the show, please subscribe, like the show, whatever the heck. I hope you like it. If not, let me know what's wrong with it. We'll make it better. With that, let's go ahead and jump into talking about Stamford, Connecticut. All right, a little bit of a messy deal, which, by the way, that's the whole point. Frankly, I love foreclosure bailouts. David wants me to talk about them less. I would probably do all foreclosure bailouts because I think it's great. We're helping somebody out in a tough situation. When I found out we could do it, I was surprised. I didn't even know that was a thing. So sure. Why don't you give people a rundown on Stamford, Carrie and Stamford, and the foreclosure bailout?
Kind of a unique situation. There was two issues with this particular property in Stamford. One of the issues was there was 4 people on title to the one property. Now, our borrower wanted to take the other 3 people off title and buy the property himself. So that is, normally something that we've seen in the past. However, he was using the money to not only buy people out of the particular property, but there was enough equity in the property. He was taking that money out to go bail out a foreclosure on another piece of real estate that he owns.
All right, so that sounds pretty complicated. So there's 2 pieces of real estate. One of them in foreclosure, the other one owned by 4 people. Your client is one of those 4 people, and was there any equity in the property that it's foreclosing?
We didn't even really check because we had so much equity in the primary property that we're lending on. It did not matter to us what he was doing with the money on the other side. Okay,
so I'd say a normal average foreclosure bailout, somebody comes in, say they own a property that's worth $1 million, they've got a $300,000 loan that for some reason they're defaulting on, and the normal foreclosure bailout would be you just say, hey, there's enough equity in that property, let's pay off the other loan, give you a little time to whatever, right? That's how they typically work?
That's how they typically work.
So this almost isn't a foreclosure bailout, it's simply a cash out on another property, and he happened to use the funds for the foreclosure bailout.
For the foreclosure bailout.
So when you got 4 owners, all 4 of them have to agree to this process. Being one of the 4 owners, did he own 25%?
He owned 25%. He was buying out the other 3. They were relatives. He was buying out his siblings.
Okay, so he's able to get enough money out to pay everybody off. So he now owns that whole property with 1 lien against it. And the other property was all him? No partners?
All him, no partners.
Okay.
We're holding hands over here.
Yeah, that's how we're excited we are on the foreclosure bailouts. Okay, so this one's a little bit different. Have you done many like this?
I've done many foreclosure bailouts in my career.
Okay. And how much of the time are they pulling equity out of one property to bail out the foreclosure versus pulling the equity from the one property in foreclosure?
It's pretty rare. People that are in foreclosure typically don't have multiple properties like this particular gentleman did. People in foreclosure typically have one property that they're really looking to salvage and they're really looking to save.
Okay, so how'd the property get into foreclosure? Do you know?
What did he tell me or what really happened are 2 different stories.
Okay.
We like to say here buyers or borrowers are kind of, skirting a lot of the issues. It was just bad management and bad times for him and his family. That's why he got into the foreclosure situation. But when we do bail people out of foreclosure, it's important to really know what the background story is, because that really does make a difference. If somebody's just not paying their bills and not paying their property and they're going to let it go to foreclosure and bail it out and let it go to foreclosure, bail it out again, those are really tough clientele. But if somebody has a really legitimate story of why they're in foreclosure, let's help them out. Let's bail them out of foreclosure if they have the equity in the property.
So one of those stories that would definitely work could be something along the lines of, I had renters in there, they stopped paying, I had to go through a long legal process to get them out, and after 6 months of not having any rent income, I was having trouble making the payments, but now I got them out and I got a new tenant. Something like that would be a reasonable story.
Right.
What other kind of situations can you think of where somebody might be in foreclosure, but they have a reasonable, perspective that they could...
Divorce situation is
Okay.
a big one. Medical situation's another real big one. Divorce, medical, loss of job are really good, legitimate reasons to go into foreclosure.
So lost a job, but then you'd want to see them already have a new job?
Right, or a slowdown in their business that you can isolate. They had a real problem in their business and now it's back on track, cause them to get into foreclosure. Divorce situations cause foreclosures, and medical
Right.
conditions cause foreclosures.
Okay. So how far do you go into verifying these stories? Because anybody can make up a story, right? I mean, do you ask for sort of proof that they're working again, that kind of stuff?
I mean, if it's a loss of job or a loss of business revenue at a certain time, we're going to want to see that they're back on track and that they have the revenue coming in to make the payments. As far as it being a medical or a divorce or any other sob story, we're not going to verify too much, but we do want them to be honest and tell the truth to us.
Okay. And you can kind of feel it out as you're talking whether or
You
not
know.
it's something real, right?
Yeah, you know, just your gut will tell you. And you guys are all smart enough to know whether or not you're being buffaloed or not by the borrower.
Okay. All right. So if, very frequently our CRE loans end up financing around 50% loan to value, maybe 55, 60. We can go up to 65 on residential, but I really don't see that happen much. It tends to be a little bit less. So on a foreclosure bailout, would you say it's also going to be around 50?
50
if
to
it's that
50
one property,
50,
or
55% loan to value is really where you want to be on foreclosure.
so it's
bailout.
about the same. You don't discount it because of the foreclosure.
There's really no reason to. There really isn't. As long
Okay.
as you have the spread and the equity, you're going to be safe.
Now, are there states that you're going to be more careful in?
The East Coast and Northeast, sorry out there, folks. It's just that the laws protect your consumers a little bit more in the Northeast part of the region. So when we're in the Northeast part of the region and it's a foreclosure bailout, we're going to look at it just a little bit harder.
So what, New York, New Jersey?
New York, New Jersey, Connecticut, really the east border.
Okay, all right. Great, so tell us about some other foreclosure bailouts you've done. You've done hundreds or thousands
Sure,
of them over
sure.
the years, so any interesting stories pop out?
Again, nothing really interesting pops out at the top of my head right now, but the majority of the foreclosure bailouts, Tim, that I've seen have really resulted from what I mentioned to you before: medical, loss of job or / income for a short period of time, or divorce.
Okay, so I happen to know because we've talked about it. David on the side is actually doing a fix and flip right now, or at least you're about to, or where are you in that process? And that is also a foreclosure bailout. So why don't you kind
Very
of tell the
interesting.
backstory and say what you're doing?
Okay. Very interesting. I had a broker call me, a friend of mine from Arizona, call me and tell me that he has a property in Norco, California, which is just outside Orange County, which is in actually Norwalk, outside Norwalk.
Okay.
Norco, California. And the people were in foreclosure for about 8 months, behind on their house. And unfortunately for us, I couldn't give them a loan because of it being a owner-occupied consumer loan. So what I did for the people is I offered to buy the house from them, let them live there for like a month and a half for free, give them a bunch of cash that they never would have got quickly because the house was a real mess. They agreed to take my purchase price. They literally just moved out over the last weekend or the weekend. And as of today, I literally just changed the locks on the door. My crew is going to be meeting me out there over the weekend. We're going to go through the house, remodel it, fix it up, and put it on the market hopefully within about 30 days.
Okay, so you're doing a fix and flip.
I'm doing a fix
All
and
right,
flip.
so
It was
we're
a foreclosure bailout fix and flip.
David's walking the walk here. All right, so they came to you, didn't qualify for a loan because it's owner occupied, and there's all the crazy laws around owner occupied homes. So why don't you give us some of the details? Did you do an appraisal, or you just go on?
No, I do my own appraisal on a deal of this nature.
How long do foreclosures take in California? Assuming somebody isn't fighting, or maybe they were fighting. 8 months.
4 months, but it was Wells Fargo and a Desert Schools credit union, or a credit union that had a first and second on it. So, look, as a private portfolio lender, we have no choice but to start a foreclosure typically after 30 days in our process. When you're dealing with a Wells Fargo, a Bank of America, a Chase Bank, they will work with their consumers for a very long period of time. And as you may be aware of, if you know how to work the bank system, you could live in a house free for 8-9 months before they even do a foreclosure.
Oh,
and
so they came to you at the last minute. They were going to be, okay.
Right, at the last minute. The sale was already started and there was a foreclosure date, so we got them at the very last minute.
So what would you say is the current market value of the property before you do any rehab?
Right now,
Yeah.
as is, it's hard to say, probably 640, 650 as is.
Okay. And what is that what you paid, or did you get a discount?
No, we paid $515 for the house.
$515.
$515.
So you came in at $515, but you actually didn't have to fund the whole thing.
Well, I had a bailout. I had to catch the first mortgage and the second mortgage current.
Oh, they had two mortgages.
Two mortgages, and I had to give the guy a lot of cash to move out, or a lot of his equity out. I gave him a lot of cash to move out of the property, plus I got my fix-up cost. So I'm still going to come in with probably close to a couple $100,000 by the time I'm done.
Right, so to be clear, you paid all the back payments on the Wells Fargo loan.
That's right.
That loan did not go away. You just caught it current.
And I will assume
and the same
payments.
on the second mortgage. You made it current, and now you're going to take over making those payments. So as opposed to paying $515 cash, you came in with a lot less, couple $100,000.
Yeah, probably
something like that.
$250 probably by the time I'm done.
All right, so you put that down. You gave extra money, move-out money.
Move-out money.
And now what's your construction budget?
I'll know for sure over the weekend, but I'm figuring on the high side $50,000. I think we'll probably get it done for closer to $35,000.
Okay, so you got a property that you bought at $515, but you really put in $2 with the construction.
No.
What's your total? What's the total
I'm into
cost?
this deal, no matter how you shake it out, at $515 before I put any construction money into the property. I'm going to put in, let's say, $50,000. Let's say I'm into that project for $565.
And you think the current market value is already above that, $650?
We could sell it right now.
And
without doing anything to it.
Once you fix it up, what do you think you'll sell it for?
Seven and a quarter, 715, 7 and a quarter range.
Okay, that's great. All right, now David at Lendterra, he does not finance fix and flips. We do have a division that does do fix and flip financing. So if that sounds interesting to you, maybe you already do this. Maybe this is an old conversation for you. Then contact us. We'd be happy to help you with that. I'm kind of kicking myself because David asked if I wanted to do it, and I was like, no, I've never done a flip before. I just want to focus on the business now. I'm kicking myself. But it sounds like an interesting story. The most interesting thing about it for me is that they quick claimed, that's what it's called, right? They quick claimed the deed to you, but you maintained the old loans, cutting your capital by 60, 70%.
Oh, yeah.
Yeah, that's great. So you come in with a lot less. It reduces your short-term risk, and if you can turn the property in a couple months, then you're making a lot of money for
nothing.
A little bit of work and a little bit of risk.
A little bit of risk.
All right.
A little bit of risk.
Well, cool scenario.
And we're looking at another scenario in Laguna Hills, California over the weekend. Mm-hmm. Kind of similar situation. The guy hasn't paid a house payment in 4 years.
How do you do that?
4 years. He has a gal that he works with that was able to go to Wells Fargo over and over and over and over again.
Wow.
Wells is done.
Wow. Yeah,
Okay.
4 years.
So I'm going to
That's the longest I've ever heard.
So I'm going to go to him, and I'm going to look at that deal and offer him something very similar to what we did up in Norco, California.
Okay. Cool. All right.
And I'll
If
report
somebody
back
wanted to
into
do
you.
that with us, they couldn't come to us for that kind of financing. Unless, actually, they could, right? If you have a property with enough equity in it, you could come to us, we could pull the capital out of that property, and then you could use that money as the cash to do this type of project
Right.
somewhere else, right?
Right.
Okay.
Or if there's a project where the people, well, remember, if they're in foreclosure and it's owner occupied, we can't help you if it's consumer loan. However,
But their property, they could pull money out of their
they
own
can
property.
pull money out of their own property. However, if there's foreclosure situations on a commercial property, let's look at it, let's talk about it on the non-owner occupied, non-consumer stuff.
Okay, great. All right, so what are some of the things you're looking at? If somebody comes to you and says, I need a foreclosure bailout, here's my story, what are the things that would make you want to do the deal, and what are the things that would disqualify it for you, besides the owner-occupied side? We all know that.
Great. If somebody's in foreclosure, it's their first time in foreclosure, and they have a really good reason for it, that's okay. Let's look at it, make sure the loan-to-value is there, and let's make them a loan. If somebody's been in and out of foreclosure 2 or 3 times in the past year, and their story changes each time, It's just another foreclosure waiting to happen, and we probably wouldn't be too interested in taking that risk on.
Okay, yeah, we're not looking to catch a falling knife, right?
We're not looking to catch a falling knife. We're looking to boost somebody up and give them some help is one thing, but somebody that's been consistently in and out of foreclosure is just something that we're going to kind of stay away from at this particular point.
Okay, all right. But if you have a situation, bring it to us. It doesn't take much time for us to look at it and let you know. Have you seen any foreclosures come through over the last week?
I have not.
Okay, all right. Okay, so that's good. So the things you look for are somebody who's not a repeat offender, let's say.
A good one.
And somebody who has a good story for why whatever happened is not going to continue to happen in the future. Besides the repeat offender, are there things that are red flags to you where you'd say, you know what, the story sounds good, but I'm not going to do that one because of X? Do you have anything like that?
X would be the condition of the property.
Okay. What kind of things? Is it a hole in the roof? Are you looking for?
Just something that's not maintained by these people. Something that there's no
Okay.
pride of ownership, if you will. Deferred maintenance is going to happen, especially if you're in a foreclosure. You didn't have money to fix the hole in the roof. We get that. But somebody that just has their building or their property sloppily handled and inside, again, is an issue if they're in foreclosure.
What if somebody had a bad renter that destroyed the
Different
property and then
story.
they took it back?
Different story.
And
You
that's
can
good.
always tell. You can always tell. And they're using the money to fix the property up. That's a good story.
Okay. All right. Well, good. That's most of the stuff I wanted to cover. Have we had any comments or anything? No? Okay. All right. Well, we'll go ahead.